What if I told you you could own part of a Skyscraper, a treasury bond, or a Picasso without needing millions in the bank? That's the power of real-world assets coming on-chain. And guess what? Swift and the XRP Ledger are leading the charge. Welcome back into Crypto Info, Blockchain Made Easy with your host, Frank the Crypto Tank. Guys, please tap that like and subscribe down below. Today, we're unpacking how tokenized assets are reshaping global finance and why XRP is right at the heart of it all. What are real-world assets? Real-world assets, or RWAs, are just that. Real things like real estate, gold, bonds, or stocks turned into digital tokens that you can buy, sell, or trade on blockchain. It also includes intellectual property and some other things like that, some intangibles. Fractional ownership, buy $100 worth of real estate, faster, cheaper transfers, and global access without intermediaries. It brings all of these things. Major analysts say tokenized real-world assets could represent trillions of dollars in value within the next 5 to 10 years. It's not hype, it's the next phase of finance. If you've been in this space for a little bit, you know this to be true. Swift's entry into the game goes like so. In 2023, Swift, the network behind global bank transfers, ran a pilot with Chainlink and 10-plus mega banks like Citi, BNY Mellon, and BNP. The goal? Move tokenized assets across blockchains using the existing Swift network, and it did actually work. The pilot showed Swift could act as a single point of access for banks to interact with multiple blockchains. That means no more building out dozens of custom integrations, okay? Just one connection with Swift in the middle. Why is this huge? It removes friction, accelerates adoption, and makes tokenized finance scalable now. It also lays the groundwork for institutions to join crypto without even knowing they're using it. And isn't that the goal? Just the way things like STMP or HTTPS or whatever, nobody wants to know any of that. They just want to know the internet works. The bridge language, now here's where it gets technical but crucial for ISO 20022. Swift is rolling out this new global messaging format. We know by November of 2025 this year, banks that want to play ball moving digital money have to play ball with this, okay? It's a format to standardize how financial data is shared. Okay, so it lets institutions include detailed asset info, including tokenized securities, in every transaction message. Think of it like the world's banks learning to speak crypto, okay? So they can process digital assets just like fiat wires. This is the transition layer between legacy systems and blockchain economy. XRP Ledger is made for tokenization, guys. Enter the XRP Ledger. The blockchain isn't just about payments. It's purpose-built for issuing and trading tokens, especially RWAs. Here's why banks and institutions are eyeing XRPL. 3 to 5 second settlement, less than a penny per transaction, native token support, no risky smart contracts, built-in decentralized exchange, compliance tools for KYC, know your customer, and asset control. That's pretty powerful. Plus, XRP plays a crucial role as a bridge asset, allowing seamless swaps between tokenized assets. Automatically, in real time, it's like having an invisible liquidity engine running under the hood all the time, okay? Real world adoption happening now. This is obvious to see. This isn't just theory anymore, okay? It's already been happening. If you've been in the space for a while, you know this to be true. For example, in Dubai, the government's land department is using XRPL to tokenize real estate titles. The goal? To put $16 billion worth of property on chain by 2033. In the US, Guggenheim partners, yes, Wall Street Guggenheim, is using the XRP Ledger to issue tokenized U.S. commercial paper backed by treasury bills. This signals a big shift. Institutions aren't just testing the waters, they're actually diving in. The regulatory green light in Europe, the MiCA regulation, is now live. It gives clear rules for issuing, trading, and managing tokenized assets across the entire EU. That's regulatory clarity at scale, folks. In the US, the SEC is moving slowly, but they are talking, and with the new administration, we think they're going to move just a little bit more quickly here. Commissioner Mark Ueda has called for custom rules for RWAs, and firms like Robinhood and BlackRock are proposing frameworks that treat tokenized assets like their real-world counterparts. The message? The legal rails are being laid for mainstream adoption now. Okay? SWIFT is building the pipes. XRP is delivering the speed and compliance, and XRP might be the key that connects it all. We're just going to have to see. If real-world assets are the next trillion-dollar trend, and they are, then the platforms that move them efficiently, securely, and globally are where the value will flow. Never financial advice. Guys, thanks for stopping in. Please don't forget to check our link down below for Caleb and Brown, your one-stop concierge service for crypto brokerage. You get your personal crypto broker. Please check them out. You'll get all the details there. You won't be disappointed. Thanks for joining us in for Crypto Info, Blockchain Made Easy with your host, Frank the Crypto Tank. We love you guys. We'll see you in here next time. Check you later. Why? Why am I saying why so many fucking times?